All right, everybody. So January of 2025, how is real estate doing? Is it normal? Is it not normal? Is it slow? Yes, it is slow, but it is the usual trend in the real estate market. And it has been like this for a long time. Those are called real estate market cycles, and they do happen, right? So we have the December, we have the January, and then we're starting to pick up from February onwards, and we get into the spring market. I have talked about this, and my major concern when it comes to real estate is that spring market inventory that will shift obviously the pricing, it will shift the demand and everything else. President Trump has declared that he might impose tariffs on Canada starting February 1st of 25%. What will it do to the landscape and the real estate? I don't know. I am not an economist, but I do know that it might have an impact when it comes to general economy and how we trade and behave when it comes to business and real estate and all of that stuff. Having said that, how much money do you need to earn to buy an average home today in Toronto? So I have that question being asked many times. So what does it take? How much money do they need and all that stuff? So I have a couple of versions. So version one is going to be today, you buying with minimum down payment of 5% on an average home that's currently today at $1,067,000. That's the average home in Toronto. And then the second version of that would be if the interest rates would drop. I chose 5.5% average bank rate for this calculation. But in my second version of this calculation, the price will remain the same, but the interest rates will drop to 3%. So I'm giving you 2.5% drop, right? And let's see how those numbers look like and how it would change when it comes to your income and the affordability and all of that stuff. And the third version of this calculation would be if the interest rates would go down to 3% and we would see a 20% decline in real estate market, what would happen and how would that impact your pockets and your affordability? So let's get right into the video. Obviously, I took notes. I cannot remember all these numbers off by heart. So the average home is $1,067,000 in Toronto. Having said that, in order for you to purchase with the 5% down and interest rates of 5.5%, you would need $212,000 of income. Remember this for a second, 212,000. Now, I'm bringing something else into the equation. Having said this, we're searching for somebody that's four people family. So husband and wife or a couple with two kids under 18 years old, all the expenses and two vehicles. So in order for them to survive, they will need $212,000. So let's get into some other detail. So that would be $18,000 per month of income, which translates if somebody is employed for 40 hours a week. So 40 hours a week would be somebody getting paid $112 per hour, right? So obviously, if two people are employed, so they would need $56 or $58 an hour, both of them, right? So this is a huge amount. So now you see why the affordability level, and I know like there's many people commenting on my channel, stop it, real estate goes up and it's never been affordable and we have a housing crisis. And listen, I don't care about all of that. If people cannot afford it, they cannot buy it, period, right? So if you're not making $112 an hour, you're not buying a house. Simple as that. So let's get into some more data. Now we get to the same scenario, right? But now the interest rates would be at 3%. So this is going to be interesting. So same house and all of that, 5% would be the down payment. So to cover the mortgage and the cost and all of that stuff, you would need to have a household income of $183,000, which is a significant drop. But think about it. The interest rates would feather down to 3%. That's, what are we talking about? 2.5%, 250 basis points going down in order for us to see a family affording a house of $1,067,000. They would need a household income of $183,000, which translates into $15,000 per month. And that would translate, if somebody would work 40 hours a week, it would translate to $94 per hour. So $94 per hour. Obviously, if there's two people employed, we need, like, what is this? Like, we need like 50, so no, 40, $48 an hour, right? $47 an hour to be exact. So we need a 47 for each person in order to afford a house in Toronto, an average. Now we get to the third calculation. Let's take a different color here, and this is going to be interesting. So now we're calculating the interest rates remaining at 3%, and we would see a 20% drop in prices. So two things helping buyers: interest rates to 3% from 5.5, and the actual real estate prices feathering down another 20%. So what would happen? So in this scenario, the household income to afford an average house would be $169,000, which would translate to $14,000 per month, which translates into 40 hours a week, which translates into $88 per hour. So now with $88 per hour, now this is something that people could actually afford this house, right? So this is a, freehold property, average home in Toronto, right? So based off of this, obviously the smaller caliber real estate, semis, townhomes, and all of that stuff would be even cheaper to afford. But just imagine the scale. Now, when we have all of that, now let's get into something. As of January 2025, okay, which is this month right now, the average earner in Toronto is around $57,000. So the average earner in Toronto as of Jan 2025 has a paycheck of $57,000. So you're asking me right now, so what is the top earner? So a top earner, average top earner is somewhere around $82,000 in change. So if you have two professionals, right, top earners, two professionals at $82,000, now like they have a chance with 3% interest rates and the prices feathering down by 20% to actually afford a property in Toronto. Now we can argue like, look, real estate was always expensive. 10 years ago, 5 years ago, 20 years ago, 100 years ago, it is always expensive. And I'm not talking about people that, have minimum wage affording a property, unless they live with other 12 families in the same household. That might actually work, I don't know. But just a regular normal family of 4 with 2 vehicles. Now with this last scenario right here in the green, we can understand that top earners with some, good reputable jobs and employment could actually afford it, right? Could actually afford it. Now, obviously, this graph with the average earners changes when we get into different segments, right? But different segments of employment or careers, like lawyers, like doctors, and all of that stuff, engineers, and all of that, they might have a different criteria of purchasing property. So they will probably not look at your average Joe Blow $1,067,000 home in Toronto. So they would probably look at a house that's 1.5 or 1.7, which offsets that need and want and your actual income. You see what I'm saying? So, but this is just the average. So in order for us to squeeze somewhat where we have an average, it's never going to be normal, it's always going to be expensive, but something where we could see the market in an equilibrium. I believe that we need to see 3% interest rates, and we need to see these current prices further down by another 20%. Whether that is going to happen or not, I really don't know. I have talked about this channel in many of my videos that some of these properties, areas, and communities are definitely overpriced, and there's not much room left. Like the ceiling is there. But from past experiences and past historical data, we know that no city has a ceiling or limit. It keeps going. Now we can argue the fact and real estate cycles going up and going down and all of that stuff, right? Like where you got caught in purchasing on the bottom or on top, and you have to struggle through that wave of roller coaster going down or roller coaster going up. So both are difficult, believe it or not. But however you slice it, I think for us to see something happened, I think the last graph needs to happen. Another 20% down, and we need to see these interest rates feather down around 3% in order for it to kind of gradually move up. And another point I would like to touch on is the spring market. Don't kid yourself. The spring market will be definitely challenging, and it will be very hard to analyze data, right? The influx and the surge of listings will happen. It will happen 1000%. 2024, we have inventory that we did not sell. It's coming back. The people that are entering the market, they're back. So everybody is in a bottleneck. Everybody is arriving at the same time, and there will be traffic. So with traffic, buyers will have more choice. They will have more negotiating power and everything else. And then at the suggested prices from your colleagues, your realtors, your hirees, the salespeople you hire. I mean, there is a suggested price that should fetch for certain homes, and most sellers will not. They're already claiming that they will not obey. That they're like, forget it. We don't care about the suggested price. I have a price in mind already. And that price is probably stuck somewhere in 2022. And this is how the inventory keeps piling up and keeps piling up. Now, before I finish my sentence completely, I understand that some of you are not in the need to sell. You can maybe wait. And some of you are already selling after 6 months or a year owning the property, which means you're struggling, the payments are high, and all of that stuff. And despite all of that, you're thinking magically something will happen overnight and the real estate will start booming by 20-30% annually. I do not think that that will be the case. But if you found value in this content, if this was explained properly to you, or at least if you had like an imaginary average what is going on in Toronto. This is it. I hope I did a good job. If you feel that there's someone else that could enjoy or could learn something from this particular content, please share, like, subscribe, and I will see you in the next one.